everyone's having a great evening or great afternoon, depending on where you are, or morning. Uh, Anyways, two things I want to look at. Number one, give me 1 second. Yeah, okay. I didn't want to lose my place. I've been actually trading the spider for a few days. Just kind of just trying it out for a little bit. I've always liked the spider. I think it moves great. With that said, I still really like the Emini, and I definitely will. I'll still trade the Emini. I'm just for a little bit. I'm just kind of just trying out the spider. I think one thing I like about it is I'm focusing it. One thing I'm really focusing on is trading small, and I've never really traded the spider. I've always traded the Emini, and the Emini is my favorite market. I really like it, but I figured I'd just give the spider a shot, try it out for a little bit, just kind of for many reasons, and at some point I want to look at options. I want to trade options, and it's just kind of a way for me to try it out for a little bit, and it's just really easy to, I like it because it's really easy to dial down in whatever position you want. Thinking about it, actually, if I could go back starting out, or go back to when I started doing all this, I would for sure either trade the spider or Forex, no question. I remember hearing Hal all the time say, trade the spider, or if you can't trade heavy in the E-mini or you're starting out, trade the spider or trade Forex. And I would think, I would, but I don't want to do that. Who'd want to do that? You won't make anything. Yeah, but it's just you're so much better off when you do that. And it's just really easy to be comfortable. And so I highly advise anybody that's struggling anyway, or it's go to Forex. Or if you can't do the spider, if you're not willing to put that much in an account, or you're unable to, then trade Forex. Let's just look at Forex real quick. Okay, so here's kind of I sometimes look at these markets, here and there, and let's just pick one. Let's just say, let's look at the euro dollar. Here was today's euro dollar, and here's the price action. Yeah, so here's around 8 in the morning Central Time. So here's about the U.S. market open. To give you an idea, let's just put it this way. Up here is it's 1.1279, so I just say 1,279 to about 1,227. So that's about 50 pips of a range. And here, yeah, the range got sort of tight, but 125. So it's basically 1,252 pips to somewhere in here 1,235. So 20. The range got fairly tight, but most days there's decent moves. Let's just scroll back. Okay, here's 8 in the morning. So maybe, I look right over here. So, okay, so testing up. We got a, spike, bad follow through, another buy climax, bad follow through. So arguably a wedge, 1, 2, 3. They'll break out above this high and this wedge, turn down decent signal bar. Just sell. Sell the market here, sell here, put your stop up here. And you just hold. And look, and if you would have done that, or maybe you sold over here waiting on a pullback. It's basically 1,244. You hold, do you get out here? Maybe, but let's say you do, maybe you get out here. 10 or 20 pips, and if you held somehow down to here, you got back in on this close from 1222 to that's another 20 pips. So you can make 40 pips right there. So try it. But anyways, back to the spider. I want to point something out real quick. I've just been kind of really just looking through. I'm trading, just to give an idea of what I'm doing. I'm still trading the Emini. I'm trading the spider, but I'm still plotting on the Emini. So you know what I'll do is I just toggle between these two. So I have a matrix right here, just a standard matrix for TradeStation, and I just have this chart over here. So for instance, you know, bar one, I just bought the market, put my stop down here, and you know, a lot of times I'll just be watching. The only time I'll go to the actual spider chart is when I am only looking to micromanage, or yeah, I guess that's the term, micromanage. I'm only looking to move a stop or set a target, or for instance, you know, okay, I bought this, my target stops down here, and then we get this rally, and I say, okay, I'm gonna move my stop to below here or below here. Well, obviously the E-mini is, you know, 2100 something, and the spider's 213. So I'll just, you know, quickly move my stop, and then I'll just flip right back to the E-mini and just watch from there. You know, if you look, you can't really tell the difference. Now, I have to admit, I actually, you know, one thing I have to remember and get used to is I ended up selling here and then realizing it's 250. Luckily, honestly, this bar had about 2 minutes left to close, and I quickly realized, I said, wait a minute, I'm trading the spider. It closes in two minutes. I need to get out. And so I just exited that market. But overall, I really enjoyed it today. I really everything went. I really enjoyed trading today. Not that I haven't in the past, but what I mean is I just really enjoyed the spider. It's a great market, a really great market. So, anyways, you know, I don't want to go too much into the spider or the E-mini. You know, it's all preference. You know, if you're perfectly happy doing what you're doing, then trade the E-mini or trade the spider. Just keep doing whatever you're doing. And if you're not, then always think to this. Here's my main ballpark. You know, here's my whole point. Always make sure that whatever you're doing, you're comfortable doing it. I promise you, you will make more money trading the I don't care size than you ever will trading too heavy a position. You won't do the right thing. You know, I say that because it's so much easier to, you know, whatever point, you know, maybe you sell this close, and then you say, okay, well, high to buy, bull trend, maybe I should get out. Well, you just get out. You know, sometimes it can be hard to do certain things like that when you're in too heavy a position. So, but anyways, one thing I want to point out, this is real interesting. I just looked back. Sometimes what I do, I'll pull up a chart like the spider, and I just went 150 days back to around February the 20th, and I just scroll through the days, and I just kind of pretend like I'm quickly, quote unquote, trading that day, and you know, practicing and thinking in terms of always in. Okay, you know, for instance, I'm looking at this day, and I can't really scroll back any further, but okay, so bear bar, you know, big gap down, bear bar, you know, do you buy above bar two? Well, maybe, but could be a second leg down. Arguably always in short, better to wait. You know, probably sellers above, maybe you sell above or you sell this close. But if you sell this close, you know, arguably you get out above this bar right here. And then over here, you know, if you're quick, you buy this lower, you buy on the stop above this bar, and clearly always in long, but below the moving average. So reasonable to get out of longs here. Otherwise, you buy and put your stop down here. And you got your second leg up. So your long stop down here. Pretty strong rally, pretty tight channel. Above yesterday's high, so likely target. And I'm not going to do this the whole day, but I'm just it brings into my point. So the stop's pretty far away, arguably down here, you know, maybe measure move up from these bars. And then we're starting to get this, you know. This is one of those, if you're quick, you get out. But if you're not, you just hold. This happened today, and it's very dangerous to. It's very easy to do the wrong thing. You have to remember. Okay. Oh, well, what am I thinking? Here. Now, there we go. So that's okay. This is a lot better. I like this more. There we go. So okay. I wasn't thinking. I was like, how was I doing in the first place? So, anyways, at this moment, your stop's far away, and you got to be thinking, will we test this gap? Well, a couple things. It kind of looks like a trading range. It's a small pullback bull trend from here, but you got to think, gee, if I'm a bear and I sell the high of bar 1, I'm probably going to make money. So maybe do I sell below this bar? Well, maybe. Clearly, the bears made money. So my whole point is, you have a couple choices. If you're holding long, you either get out below this bar or maybe above this bar if it lets you, or maybe this close. But if you do, you got to be prepared to buy again. And then, this is what always happens right here. It happened today. I'll point it out in a minute. Hadn't touched the moving average in some time. We broke above it strongly, so arguably support. A lot of times, when the market becomes clearly always in long, or it's logical to sell somewhere, such as, a strong bull close at the moving average. You sell that close, use a wide stop, and you sell more below a bull bar, or below a bear bar. A lot of times you can make money. Maybe you sell the second entry short, or a small breakout pullback short here. It barely lets you out. Anyways, this happens a lot. You get a very tight channel down, and then you get a buy signal at the moving average. And your thought has to be, okay, well, bears close the gap. Are we going to get a second leg down? Tight enough channel, maybe a small second leg. But we're probably not always in short. The bears probably needed one more bar. And, look where we are. We're close to 50% pullback. Maybe it started from here, so maybe the pullback was there. And in this case, if bulls see this is the start of the move up, then we're at a 50% pullback. So, I would not be short down here. You've got to ask yourself, it's probably trying to be a major trend reversal. So trend line break, maybe a lower high, maybe a higher high. And then you can see right here, bears give up. And then we test the new high, but look what happened. We get a strong breakout, semi-bad follow through, hesitation. Strong breakout, but look at the close. A weak close. We failed to close above this high. This high is at 43. This close is at 43. So we could not close above a new high, and we're starting to turn down. And kind of looks like we're in a trading range, but still probably always in long. And that's kind of interesting. I wonder if this is a Fed day. I don't think it is. Probably not. That's probably not a big enough bar to be a Fed day. But yeah, anyways, regardless, one thing to think about is, and I'm going to finish this day actually in just the terms of the spider, because I want to get used to thinking in terms of different tick values. So in general, 10 cents is the equivalent of, let me break it down for you with the spider. Here's the way I see it, or with any ETF. So 500 shares to me is the equivalent of one Emini contract. Second, 50 cents, 40 to 50 cents is let me start over. 50 shares is about one contract, so arguably 100 shares is a fifth of a contract in the Emini in terms of an equity account or stock account. 10 ticks or 10 cents of a stock, and most of the time is the equivalency of a 1-point scalp. So with the spider, 10 cents is about a 1-point scalp, 20 cents, 2 points, 40 cents, 4 points. So, it's kind of, obviously this day is pretty big, but, for instance, let's see if the bears are making money below bars right in here. So arguably if a bear went short at 15, arguably they needed 2 point, let me just see real quick. Now I'm actually kind of curious. So 80.25, 79.25. Okay, so no, still it's fairly tight. Oh, of course, yeah, it's barely, So yeah, so a lot of times it's confusing. It's hard to tell if the Bears are making money. Most of the time it's pretty easy, but a lot of times I'll look at the E-mini and I'll just judge it from there because I'd watch the E-mini even if I was trading the Spider. Really still tight, probably always in long. Does the bear get out here? Well, maybe, or I get the logic test of these high close, but it's right above the moving average, so lowers the probability. But you can see a lot of bulls were trapped out, so still always in long. Probably, in terms of exhaustion measuring gap, we're probably going to close this gap, so it's probably going to be exhaustion. But you always got to be thinking about this, some sort of measured move up, and strong enough breakout, probably second leg. We got our second leg. Do bulls get out here? Well, maybe this is the first leg up and we get a small second leg. I think it's probably best to get out. And I say that because you have a gap here and a gap here. This gap's probably going to close. Probably this gap too. It's trading range. It's a channel. Maybe you can argue that. First, second, third. Leg one, pull back. Leg two, maybe. Close enough. But a lot of times you get second leg traps. This just we're at logical resistance here. So anyways, maybe bullet, maybe bear gets out here, but if they do, price hesitates, they got to get long again, and still, once again, the range here is fairly small. I'm just gonna look on the E-mini for now because it's easier for me to kind of look at the values. For instance, these bars are tiny, so maybe a bear gets out below here, a bull does, but then we start to pause. And maybe you got to get long again. That's kind of a tricky call. But regardless, it's still always in long, and it's going up. And yeah, it's 1430, and you can see it just kept going up. So yeah, I don't want to get too far into that day, but let me go to the 5-minute real quick. In terms of today, here's what I was talking about, by the way. Strong breakout, possibly exhaustion, maybe a two-legged pullback. If you get out in here, that's okay to, get out of a long, but I wouldn't get out of a long down here. If you get out, you got to get back in again. And a lot of times, the market will trick you into thinking it's always in short when it's only barely a 50% pullback. And then you'll have traders who are, for one, you'll have bears who want to sell a pullback, which is what they did over here. You'll have bulls who want to get out, somewhere at the high or want to test back up, which they certainly did not. We clearly went more higher, but anyways. Bar one, decent bull close, but high, big tail. Always in long, double bottom for the past 2 days. So if I had to do anything, I'd be long, but again, not a great buy yet. And here, failed breakout below the low, decent buy above. So I'd buy at least. I'd put my stop maybe down here. Excuse me, down here, my voice getting a little dry. Where do always in bears get out? Do they get out here? Well, maybe. I think it's okay to, but again, I think we're going to test up to here. So if a bear gets out, they've got to get long again somewhere. Arguably a double micro double top, up, down, so I'd get out below. And then, another good example of, this would have been a decent buy if it did not close up here. I think a lot of times, this is something Al mentioned, you heard me say the other day. You heard him today in the trading room, for those who were in it. He said, many years ago, 15, 20 years ago, he used to get so frustrated when he would see this rally that would just melt away. And he's come to the conclusion over many years that he thinks this is, it's bears causing this just as much as it is bulls. Same thing for here. And what they're doing is the bears are buying aggressively, trying to make the market as exhausted as possible, trying to really exhaust it. And then they just sell heavily and aggressively, and it makes a lot of people not want to buy. The bulls do the same thing. If you think about it, that could be the bulls doing that here. Selling aggressively and exhausting the bears, and then we have a strong, pullback or a rally. So you always have to be thinking. And here, this could be the same thing. The bulls. Yes, the bulls are buying, but it could be bears buying as well. And the reason I say that's because right now it's easy for the bears to make money. They sell this high. I gotta get some water, excuse me. All right, sorry about that. Yeah, so you'll have bears who may be selling up on this rally that they'll buy aggressively, and then once it gets up here, they'll sell aggressively. So that's one thing that was a problem with today was it was easy for the bears to make money above this high and above this high until here. Then the bears possibly got trapped. Maybe a measured move from up here. Real target, top of the channel, which is this high right here. And we're going up. So again, I'd get out if I was a bear. I would not buy here, forcing me to buy too high. Let it go. Just wait. And then here, well, probably, and real quick back to this buy. What I mean is don't buy at the market. If anything, I'm buying on stop above the bar, but I probably wouldn't even do that. Two-legged pullback. Bears had a chance to close the gap. They failed. Probably buy, if I had to do anything, always in traders, they buy above, stop down here. Maybe stop down, a few 10, 20 cents or 2 points below this low. Clearly going higher, we're kind of getting exhausted though. It's a very strong move up. Broke out to the upside, so probably strong enough for a second leg up. But you have to be thinking again, second leg traps. You get a move up and then you get a really strong second leg and the price just melts all the way down to here. So don't be surprised. I think we are going to fall below here. I do. The question is, will we get a pullback and then another leg up? Strong enough breakout for possibly a second leg up. Or, if we get enough bear bars down, we may just, test down to here. So three likely targets. This low, and this low. Start with the first one. Why this low? That is because a lot of times, if the market's developing a trading range or starting to form a trading range, I think we're starting to form a trading range here. We've had a lot of buy climax, another buy climax, another buy climax. Two best looking bull bars since the start of the day. Arguably since down here at a new high when you look to the left. So the reason I think that is because trading ranges always fall further than where traders want, and they fall below obvious stops. That's just what they do. I'll give you an example. There's a couple. Just look around. You buy this high. Well, we fall below it, trap out those bulls, and then we go up. So these bulls were right. They just didn't put their stop in the right place. You buy this high thinking we'll retest up to here. Well, probably second leg down, and the bulls buying are using a wide stop. If anything, they're buying more down here instead of getting stopped out. What else? Let's see here. Try to find one more example. Here's one. So obviously a spike and maybe a deep pullback. So a spike and channel, probably going to test these highs, at least test up to here. So decent not a great buy signal bar, but decent context. If anything, if you buy up here, don't put your stop here, put your stop here, because if anything, bulls will buy here, put their stop under here. But anyways, back to today. So then we get a high, 3 bars down, tried to test up to here, couldn't get there. High 2 buy, but you got to think, ask yourself, what is the probability, number one? So what I say that is, I don't want to use the word, but stupid, but some bulls are going to put their stop down here and they're going to below this bar and they're going to get stopped out, probably around the low of the pullback. And we have a clear gap, and we're probably going to close the gap. You have a gap here, another gap here. This gap's probably going to close. So probably sellers above. It's a high 2 buy, but we haven't been at the moving average. We got close to the moving average here, and we're far from the moving average. So you got to think this may be a high 2 buy that traps bulls, and it's probably more likely, for the bulls, it's probably bulls buying here, buying more, and trying to get out at break even. So they buy this close, they buy more above the bull bar, try to get out at break even, and then we get another bar. If you were in the room, Al said decent buy signal, decent buy if the bar closes on its high and doesn't get too big. Well, again, I think this is bears aggressively buying, forcing the bar to be too big. And then we found sellers. So if I bought above here, probably get out here, maybe here. But never, I would not, don't get out here, because this is probably at the bottom, Bear bar closing on its low, tail, tail, tail. So we didn't even get 2 bars closing on the lows. And possibly a second leg trap. And then that's what happened. And we broke to the upside. We had a little test down. But you can see a lot of bears tried to, they wanted to get out from this low close. They sell this close, sell more higher, wanted out. So back, probably never went always in short. And then we just test up. Here, would I've gotten out below this bar? I probably would not have. I see the argument. If you put your stop 1 tick below, this is one of those trades where if a bull's really quick, they'll buy this close, put their stop 1 tick below, risking 1 or 2 ticks, betting on an upside breakout, and they did well if they did that. So where do bulls get out? Well, I'd probably get out up here. We had a measured move target from, I think it's this low now. Yeah, measured move target from, over here. So from this low to this breakout point or this measuring gap. And again, strong enough. It's probably an exhaustion bar, but strong enough bar that we'll probably get a second leg, and we got our second leg. So I'd get out. And then, we're starting to test down. Decent short for, betting on a double top, but probably more sideways. I think if a bear takes this short, they are betting on this gap closing, or at a minimum, they're betting on price falling below this low. Same exact reason for here. We fell below the low, we fell down here, stopped out weak bulls. When smart bulls, they bought. So I'm going to get a breakout, and then we get this bar. Always interesting. Possible second leg trap, low, 2 legs down, high 2 buy, but below the moving average. And, we had arguably, arguably 2 legs down. So, you got to be prepared, I think, stop up here. I think the bears get out. Do the bulls buy? I think so, but it's kind of tricky. We're in time of day. You got to think probably more sideways. The high may be set, so I don't know if I'd buy. Then we get bad follow through, breakout, another bad follow through. And then we get this. If I bought, I'd get out. I think bears will sell below, but again, time of day, 2 legs really do anything. And interestingly enough, bears made money finally on the last few minutes of the day. They made money if they sold this high. So hope this video helps. That's been all the time I've got. Comment below if you have any questions, and thanks. Have a good evening.